Jobs are plentiful. Wages are going up the lower end, which I think is a good thing. They've got a lot of money in their checking account. Stocks in general had gone up for 10 or 15 years. The consumers, if you look at it today, in great shape. How to do things, if you're going to have an outbound investment controls, I just said the way that works. That's a huge bureaucracy. And so far, all the conversations have been quite rational about it.
JPMorgan obviously has a significant business in China. I'm sure that the government there would listen to you. What are the conversations you have just about sort of trying to maintain as cordial relations as possible between the two nations?
For us, we're there. And like I said, we're basically taking a back seat to the American government in this one. And we obviously have to do whatever the American government asks us to do. And we're trying to engage in conversation with our own government and with the Chinese government on what those things should be. I'm hoping cooler heads prevail here. But this is why Ukraine is so important. This can cause it to go in a bad direction rather quickly. So, everyone's got to be a little cautious. Forecasting the future is, as you know, very complicated. The consumer still has a lot more money in their checking accounts than before COVID. They're spending 10% more than last year, 40% more than pre-COVID, and it looks like they'll have excess money to spend, and roughly until the end of the year. And at that point, you can say there's a little bit of a cliff, there's a soft landing, and also QT has now started to bite. That also is going to happen at one point, probably later this year, and then, that's when you're going to know what these things do. But we can still have a soft landing. And the other thing about all this economic forecasting is Russia-Ukraine. That can change it dramatically and very, very quickly.
Do you think absent Russia-Ukraine, we will have a soft landing?
I think it's still possible, but I look at possibilities. They're still possible. I think a mild recession is possible. A harder recession is possible. I think there's a good chance that inflation will come down, but not enough. By the fourth quarter, the Fed may actually have to do more. And I think a lot of things that are happening in the world, think of the bigger trends, are inflationary. Infrastructure spending, the IRA Act, the lessening trade with certain parts of the world, bringing trade back into America. Those things are all, the green transition is going to take a lot of capital. So all those things kind of have inflationary attributes that are very different than we've been through the last 20 years. It's diplomacy. That's why this is not, we always talk about uncertainty in the economy and the uncertainty. I call it normal uncertainty. The weather is, we know what the weather's like. That's why these things are different. QT, coming out of COVID, the war in Ukraine. I think it's been pushed out a little bit further. I would have thought we'd be dealing with this a little bit sooner, but it does look like some of that stuff was coming to fruition at the end of this year. Russia-Ukraine, we just simply don't know. I think it's wrong to didn't predict, because if you look at the history of wars, they've been pretty much unpredictable, and how they play out and which ones affect the global economy and how they do. If you look at a lot of wars, they didn't affect the global economy, but they were literally in very small parts of the economy. This is not in a small part of the economy. And this is a European nation. It's Russia, and it's major oil and gas supply and food supply around the world. So this is a whole different attribute to it. The consumers, if you look at it today, in great shape. But I'm telling you, that's going to end at one point. But even if we go into recession, then the consumer is entering a recession in better shape, far better shape than they did in 08. In 08, when we went into that recession, not only did unemployment go through the roof, but their home prices are dropping dramatically, jobs are disappearing, the stock market was way down. So this one is a little bit better than that. So AI is real. This is not crypto. That's not crypto yet. This is a technology which is staggering. We already use 300 AI. We have thousands of people involved, in data, machine learning, natural language processing. We have 200 people in AI research labs, and we're already using it to do risk, fraud, marketing, prospecting, and it's the tip of the iceberg. So, to me, this is extraordinary. And the other thing to keep in mind, there's good use, but bad guys are going to use it too. So it's a little bit of a arms race in how you have to use it to protect your company, protect your clients, protect data, et cetera. And we're fully engaged. And the other thing you have to keep about AI, you need to be in the cloud to use the compute power fundamentally that you need for AI. And so that's why the cloud, digital AI, they're all kind of related that way. So, I mean, it's amazing. And this is, when you look at something like this, for your viewers, American capitalism, there are 2,000 investors here from around the world, hundreds of companies still inventing ideas and growing and expanding both in the U.S. and overseas. It is extraordinary. So direct lending, obviously one of the biggest lenders out there, but a lot of people here are also huge lenders. So, I meet with them all, and direct lending away from banks has become equally in size.
And I don't think of themselves as competitive.
They are. That's a lot. But we deal with competitors and collaborators all the time. So we do direct lending, and all it is fundamentally for your viewers, unitranche, quicker, and more flexibility in certain types of covenants. Not necessarily cheaper for the borrower, by the way. So you got to look at it, all things. So we've done, I think, 10 billion, 40 deals. We can do a lot more. And, we can work with partners in some of these deals, et cetera. But we'll do what we need to do to compete.